All right, how's it going, traders? Happy belated Memorial's Day. Today I took Friday off, and today is Tuesday, um, May 26th. Trade AD here, and I'm going to share with you what not to trade and what not to do. And today I did exactly that. Something that I'm not proud of because it did not fit my parameters entirely, and it was TV. TV was overextended, as you can see, and it was just moving straight down. Now, in the daily, I did notice that there was a there was a resistance area, a support area of 530, and it just went straight through it. So, those of you that are initiated in my kind of counter trend, I'm not looking for small resets, because if it was a small reset, then you're better off doing a pullback breakout, right? In this case, this is so far extended that it needs to pull back, and I'm looking for the very bottom basically for this counter trend. The problem with this is, and a lot of other counter trends like this, is it's going to be a curl. It's basically not going to give you a very strong signal for entry. And I saw a signal right here, and I took it, and you know that there isn't a ramp down. It was just a linear movement, and there was just this one volume spike. So this is basically somebody who's trying to anticipate and just a little over enthusiastic about a possible entry for something that's overextended. Now, in the very first lesson of my counter trend, I talk about how my strategy is compounded. Well, this is one layer of a compounded movement because it doesn't have the ramp. The ramp is basically where it would shoot straight down and exhaust itself to where all of the sellers are gone and the buyers jump in. This one didn't have that, obviously. So I was just basically hoping that I got the bottom and I'll make a profit off of it. And you can tell right here that I am. I am making $40, but it wasn't strong enough. It wasn't a definitive answer to every trader's um, mental state that it was exhausted, and it actually trickles farther down. So that's the main issue here. In order for a counter trend that fits my parameters to be a 90 percentile, it needs to be compounded. It needs to have the ramp down for a full exhaustion. And then, in which case, there's no way anyone in the right mind would want to actually enter at a pullback for another move down because it's so far down that the chances of it going further down is unlikely. I'm just pointing that out because whenever I do a trade that may not show the very top or the very bottom, somebody may chime in and say, well, I would have chosen this stock for a pullback. And I don't know if you would, and if you did, I would not suggest that as a possible strategy because the stocks that my people are looking at are extreme counter trends. So in this case, this was an extreme counter trend, but it didn't have an exhaustive exhaustion point that created the ramp to finish itself off. So this one just wasn't ready. And over time, near the end of the day, it did actually look profitable, but not for me because I set my stop at the low of day at that moment in time, and it wasn't ready. It actually went further down. So that was really sad for me to see, but it's okay. Just a lesson learned that even monkeys fall from trees, and today was not my day. I did not pick the very bottom. I did not abide by my own strategy, in which case I suffered the consequences, which was I believe was a $240 loss on that one, or $280 because I actually tried to enter it again. Now, overall, the day was still green, but this was just a really good lesson for me that I have to trade more defensively. And today I just wasn't trading on rails, so to speak. I had some hindrance in action, but when you see something right, it does go right. Like in this case, Tillery actually came to save the day because it was ramping up and it actually looked beautiful for a counter trend short. In this one, I entered early because it was just at a full exhaustive area. There was an area on the daily, and I just waited for it to shoot down. In which case, I made a nice 340 something dollars and within a 1 minute candle. The next one was J.P. Morgan. This one was a little bit sketchy because it topped out. There was a lot of volume, and it was just going to do one of those curl downs, which I don't like. So I basically just got out when I could and just put my stop at high a day, in which case it turned out okay for me. You could tell that there was an extreme volume that showed that it was going to exhaust itself, but there was a ramp. There was a ramp in both shape of the chart and in the volume. So it did eventually go my way, but not the best. And of course, as you guys know, I'm trying to avoid banks because banks tend to move along with the coronavirus and the people's mental state of the actual financial institutions. So have to be a little bit careful because they tend to be heavy in that area. Now the last one was a lot of fun. Now here's a really good study for a level 2 trade that I should probably share in a different video. But I took HTZ here because there was news that it was going bankrupt, and so it was halted. And basically it was an overreaction for that time being, at least, opening up at around 40 cents. And I went long because I knew it would have to come back up. And so I made a quick $74 on this one. Now, as you can tell on the level 2 here that I exited because I saw how the bid side was showing some extreme numbers. Now, this is where level 2 actually comes into play and is very beneficial when it comes to news plays, because it can tell you when there's going to be a wall that needs to be broken out of, or it's going to not be able to break through that wall. A wall is basically a very large number that doesn't break down. And when it does break down, say the number's 500, you can see it start breaking down into 499, 470, 460, in which case that price would just break out. But in this case, the wall is getting larger and larger on the bid side, and that's when you're going to see a halt all the time. Almost 100% chance that when you see numbers like this and the price isn't changing, it's going to go into a halt. Now it's up to you as a trader to decide if you want to stay inside the halt or just get out, because of course, like I said, HTZ got hurt during coronavirus, and people aren't renting cars, so they were going bankrupt. So this is a relief from an overreaction that I took advantage of for the move on up. But of course, you should be skeptical because it does come down eventually. So I didn't want to stay inside this halt. And you'll see right here that as the numbers increase and stay the same, that the level 2 will tell you that it's going to go into a halt. So I always say that the level 2 is very important. And time and sales is as well. But a lot of times whenever something like this happens, when a stock is moving really fast, time and sales is hard to read. I use that in my peripheral vision as I see the numbers the tape just run down. And so you can kind of tell the direction, the momentum. But the level 2 is going to tell you what could happen. Now, of course, you could get faked out. There's always hidden buyers and sellers. But when it comes to this, nobody's hiding anything. It's going to halt. So that's HTZ. So overall, I'm up about $200-ish today. But I like to share with you, and here's HTZ overall for the rest of the day. So another good reason why you don't want to stay in a stock that possibly could go the wrong way. Now here is HOG, Harley Davidson. Now you can see from here that it does a breakout right here, and it shoots on up. Now it's kind of clean on ones. You can kind of tell. Let me go ahead and zoom in here. You can kind of tell that it does trigger every now and then, but of course you wouldn't enter it here, would you? Let me just get a little bit further out so you can see that this is the breakout area. And it triggers here, but you're not going to take it because there isn't that volume ramp, right? So here's a volume ramp right here. Here's some volume here, and it comes up. And if you went in early, it fakes you out, and the volume gets higher and higher. Ideally, you probably want to see volume larger than this one, right? So you're looking for volume, that is about 200,000. Now, there is volume right here that exceeds that, this red candle. So this would have been a good area to enter. If you, I mean, at least it looks like it, right? And then it comes down about 10 cents. But it fakes you out and it goes even higher. Here's another even larger volume candle, a volume bar for this red candle, which you may have added. But it fakes you out again. And it goes all the way up to here, all the way up to 25.24. In which case, there isn't much volume left. So let's go ahead and look at the daily and reassess this, because that was the very high. Omitting this red candle, which was today, this is Friday. Now it went up to here. Now you can tell this candle right here actually touches more or less in that area, 25.30, and we went up to 25.25, which is pretty darn close enough. So why is this a nightmare if it went down? Because this is hindsight, obviously, and if you're being as transparent as possible, if you notice that there was a daily resistance at 25.3, you may have waited. If you were patient enough, you may have caught it on a ones here and maybe have entered around 25.09, in which case it went down all the way down to 25.80s, and that would have been nice. That would have been a good from 25.9 to 25.80s, a good 20 cents. That would have been great. But if you were any greedier, in which case a lot of people are, and let's just go ahead and use this right here to show the 5-minute 9 EMA for its elasticity here. If it went up to here and you're waiting for it to come down to that blue line, it doesn't. It just goes sideways. In which case that elasticity loses its elasticity and just kind of meets right in the middle as it goes sideways for 45 minutes later, as it goes sideways, if you did not catch that bottom area. And this is the 5-minute chart, by the way. So yes, in my opinion, this would have been a nightmare for me, because as you guys know, I don't like holding my breath that long. So if I actually got it from the top and triggered on ones at 25.09ish and had a good entry, then yeah, I may have gotten out early, like you guys know I would have. But if I were any greedier, I would have went out all the way back up to 25.20, so I would have been down 10 cents or more, in which case slowly over the 45-minute period it would have went down to where I probably would have gotten out. This is hindsight, obviously. Some of y'all could just easily look at this and not take this seriously and may assume that you would have held it all the way till it hit the VWAP, which is possible. Some of y'all are greedy enough and have the resilience to wait for the VWAP, but we all know that a lot of times this doesn't happen. This just doesn't happen unless you have a lot of shares. And if you had a lot of shares, hopefully you would have gotten rid of it within 5 minutes, this candle right here. In which case, you would have just waited it out and had a few hundred shares for the VWAP, because that would have been a great move. So, of course, hindsight as well, this may not be considered a nightmare because this was a compounded trade. This was a good strategy with an early volume signal. So volume signals can be a little early. I'll grant it that. But for anybody who thinks this would have been a pullback for a breakout, well, you would have failed there as well. So still, this would have been good for a counter trend, but this, in my opinion, would have been something that just doesn't happen very often, because it should have just came down and touched a 5-minute 9 EMA, but it didn't. It just went sideways. People weren't ready. So I really didn't like this chart at all. But just to say that if I did trade on Friday, I would have taken this, and this would have been a pain in the ass. I would have hated being in this trade, and I still think I would have been green because I would have been patient for that 25.30, because I'm always dissecting the daily chart, and I'm pretty sure the chat room would have spoke about it. So we have a lot of like-minded people that are part of that counter trend legion that would have helped each other out. But if you're anywhere over as overeager as I was with TV today, you would have failed this this move, and it would have been really disappointing to see hindsight that it actually went all the way down to the VWAP. So just a good little reminder of what not to trade, or what to avoid, or what to look out for. Trading is an art, as usual, and so we have to take things as I like to say that there are some lessons that we should never learn, and this is one of them. Do not take this lesson as if it happens all the time, because it doesn't. Generally speaking, it should have went down to relieve itself, but it didn't. So this is that 10% that doesn't work out, in my opinion. For other people like Jeremy Newby, he may have profit off of it because he has a lot more resilience when it comes to patience in this aspect. I am in and out, and I get my green, and generally the green is going to be pretty big, and I'm done. A trade like this you may have seen in my old videos when I vlogged for the 2 months about 4 years ago. If you look at my really old videos, you'll probably see something like this, and I'll do perfectly fine. But just bear in mind that there are several ways to look at it, and I'm just looking at it in my perspective as how I trade now. And I prefer the way I trade now over how I did in the past, even though it's a little bit more entertaining to see how I traded in the past. I think I was more of that. If this was a battle, I would be that buddy that would be entertaining to watch. But now I'm more or less the cold-hearted sniper that just waits for the perfect shot. So there's that, guys. My breakdown for today. And yeah, tomorrow hopefully things get a little bit tighter. I generally like to start the beginning of the week strong, and this isn't looking really strong. So I still will probably stream say Thursday or Friday, but tomorrow I'll probably be focused in the Discord app or Discord chat room if you care to join me. It will be in the description below under jeremynewby.com. And otherwise, we'll see. It's been a while, and I'm pretty sure a stream is overdue. So take care, guys, and I'll see y'all next time. Bye.